Hey traders, Raghee here. Happy Monday, everybody. Welcome to another episode of Charts and Coffee. Happy August. I hope you guys had a great weekend. Good to see everybody. All right. So what do we have going on this week? We actually have a lot of interesting things going on this week. So if you haven't made a pit stop over at the Here we go. At the Forex Factory calendar, please do. We have manufacturing PMI at 10 a.m. That one's a pretty important one. I think far more important than services. So keep an eye on that manufacturing PMI, because those of you that are day trading, let's say you took my day trading playbook class and you're looking at 10 a.m. as the end of the clearing range, we're going to have this high impact, high heat, hot zone right there at the top of the hour at the end of the clearing. And then we go on a little further. You'll notice Tuesday is pretty quiet. And then, of course, it's the first week of August. So Wednesday kicks off that countdown to non-farm payroll, the big job number that kicks off with the ADP. Then we have ISM services, FOMC member Clarida, crude oil inventories. Wednesday's a pretty busy day. And then it moves on into Friday, of course, non-farm payrolls. So we've got a pretty big week in terms of data, culminating with that Friday hot zone. So, keep in mind, and now you're going to hear this, ad nauseum. Yes, August is historically a very bearish month, but we don't confuse tendencies and seasonals with setups, right? We do know there's a tendency, and if there is a pullback, great. But what we also know is there's also another tendency that we see at the end of every month, which is that we have the redemptions that hit the end of the month. So there's sometimes a flatness or a little bit of weakness we see at the end of every month as people take redemptions from their investments. But in the context of an overall uptrend, the beginning of the new month, I think back in 2009, they coined it, maybe 2010, they coined it Mutual Fund Monday. In other words, what are those flows we see back into ETFs, back into mutual funds, back into investments? So I'm not going to be surprised to see the first 1 to 3 days of the new month, especially within the context of uptrends like we have on the S&P and in the NASDAQ. These are uptrends. Don't go top picking here. Any more than I would recommend you go bottom picking in any of these markets. But we do have still an intact uptrend. So not surprising to see this Monday going into a new month pretty strong. All right. So with that being said, let's jump into our questions. Great to have y'all here as always. Okay. So CRWD. Hey there, Vish. Sure. Let's take a look. So we're pulling back. It's a double green. So keep in mind, the momentum matters. The candle matters. The zone that it is entering matters. So if you're taking a look right now at the daily time frame of CRWD, is it an uptrend? Yes. I don't mind this little bit of yellow that popped in there. Not at all. So it's an uptrend. Check. We're getting a pullback. Check. So on one hand, the 27th was an interesting pullback, as is what we're going to likely get coming out of the 30th. You can see pre-market, it's at 253.67. So you can see it's right about here. So it's still inside the wave. It's still inside the wave on the open. So here's a challenge. I don't want to buy it even into a little bit of bullish momentum. I need that bearish momentum. I'd like to see us trading below the open. I want to see momentum heading lower. That's going to give me the advantage to scoop these calls up at the bid. So yes on the buy, and possibly yes in terms of the direction. And in terms of the timing on the buy, we might have another shot at it at CRWD. Remember that when you are looking at individual stocks, know where they are within the context of the ETF universe. In other words, where is CRWD weighted? And actually, I don't know that one off the top of my head. It's not one that I look at often. But if we were to do that reverse search and we say, all right, CRWD, are you going to be tethered to another narrative? And really, CIBR and FFTY are the only ones, and I'm looking on my other screen right now. Yeah, so you have WFH, that work from home ETF. You've got FFTY, the IBD 50 ETF, and CRBR, which is that NASDAQ cybersecurity ETF. So keep an eye on those for sure, as far as the overall tide that this individual boat, this individual stock is trading within. All right, so XLB, not really interested. Jess, no, I don't have a problem with XLB, maybe at an individual holding level. So let's say, I don't actually have the multi up right now, but let's say you go take a look at XLB and look at the holdings within it. And what you want to know ultimately is, Sherwin-Williams, Ecolab, Freeport-McMoran, Newmont. Do we have any relative outperformers within XLB? Because I would not start at the tide level here. I would focus on a relative outperforming boat. So with that being said, no to XLB, but maybe XLB as a group to look at for some early emerging relative outperformance to the upside. So thanks for the question. All right, so let's see. John says, don't I worry that ES and QYM have Darvis 3.0 sell signals on the daily and 1 week chart? So Jan, I will say this. Remember that Darvis is a pattern that is a precursor to a formation. And I don't have, actually, let's see. I do believe I have the Darvis running on this. I do, and I don't have a Darvis sell signal, or the arrow showing pressure. I don't have that. So on ES and Q, what do we have? No. So remember, if we had one before, it's resistance. That's all that it is. It's not that I want to short, right? YM's a little bit different. So YM is a market that's in a sideways market, not in a trend. So any of the resistance or any of the downward pressure, any of the levels that would say we found a ceiling in the YM make more sense than the NQ and ES. So no, I actually don't worry about that. And I frankly could care less what the weekly is saying about trades, right? Weekly is really not a trading time frame ever for me. It's really much more of a position. It's much more of the time frame that I'll use to build my book of investments, to build my longer term 6-month minimum book. It's not going to really have any bearing on what I'm looking at the next few days to few weeks, if that makes sense. So I'm really not, and I don't use an RSI. But again, just because I don't use it, just because I'm not concerned about it, doesn't mean that if those signals mean something to your process, then, clearly stick with it. And that's great. But no, I don't have any concern about that. I'm still looking for a dip anyways. So kind of going back to your point, if the markets do tend to move lower, fantastic. Because at that point, what I would like to do is be a buyer of the dip, specifically in the S&P and the NASDAQ. So thank you for the question. No, definitely not concerned about it, but I would love to get opportunistic about it. And oh yeah, and a quick reminder, by the way. So yes, thank you for the link there. Tonight, 8 p.m. Eastern, New York time, 8 p.m., we're going to have our webinar about the processes and the tools and what I've been doing so far this year in a longer term. So last year, we did an interesting kind of 1-2 punch. Last year in 2020, I had my day trading class, and then we went into my ETF class. So it's really bookending my entire trading approach. In other words, what do I do in the morning? Focusing on short-term day trades for the first 2 hours of the day. And then what do I do the rest of the day? What am I doing on longer-term time frames, daily time frames, the remainder of the day? So we're doing that again in 2021. Finish the day trading, finish that segment of my trading life that starts at 9:30 and pretty much winds down between 11 and 11:30. And then what do I do with the rest of the day? How do I find those longer term trend following? I like to call them swing entries. And that's the rest of the day. And we'll be talking about that, the other part of my trading life tonight at 8. So you can register for that. Whether or not you can catch it live or not, no problem. If you register at simplertrading.com/scale, we'll get that replay out to you stat. All right. So next up is happy August. Yes, absolutely. Infrastructure bill. Don't want to fade that. We'll see how that goes today. So we've got infrastructure bill as sort of an unscheduled event that's going to move psychology this morning. Then we go into, again, that countdown to non-farm payroll, and got plenty of data, both the ISM manufacturing and the ISM services this week. So it should be interesting. All right. So next up is we have gap psychology in play today. Not really, not in a major way, Tony. Not that I believe. I mean, I'll keep an eye on any kind of gap, but for me, the dual confirmation gap means not only opening above the previous session's close, it must also open above the previous session's high for a gap up. For the dual confirmation of the gap on a gap down, it's got to open not only below the previous session's close, but also below the previous session's low. So my gaps are a little bit more, I'm a little bit more discerning, a little bit more demanding of what a gap actually needs, can be. Facebook, Foxtown, I actually have Facebook written on my my list. So when I was looking at different markets that I'm interested in playing, Facebook, American Express, there's about 7 names here on my list. Some of them are a little pricier than I would like. Those of you that are in the sector secrets mastery know we like to stick with names usually below 5 to 7 points, but we might have to get a little creative with some of these more pricey stocks. But and one ETF, XLC. So the long positions we have, from what I can tell this morning, should be fine. I'd like to see Facebook recover. That'll take our XLC, our existing XLC position higher. But yeah, I've got that one at the top of that list actually. So I do like the potential for a pullback buy. I do like that one. You can see we're coming into the volume ledges, 34 EMA wave. For those of you that use my anchored VWAP process, we won't be re-anchoring the VWAP until the soonest, the 5th of this month. So on the 5th, I'll re-anchor it to August 1. Okay. So you need a few days, right, of the new month before you re-anchor a 1 month anchored VWAP. Of course, keep up with your rolling 10-day. But, I like where we're at in terms of the structure of the market, the persistence and the strength of the XLC communications ETF. So I do like the pullback buy there for sure. SMH, no, not yet. It's choppy. It's choppy. Of all the things that I could focus on, I'm not going to prioritize a yellow. So I've been getting a lot of questions about SMH way too soon for me to say this is an uptrend. If there is a buy, it's down at the lower end of the range. So is it ready to go? No, not according to the process that I use. So when you look at the SMH, again, Intel could be something to look at. Well, let me walk you guys through it. So what do? We pull up that semiconductor ETF. We look at the holdings, and then, we'll just go one by one through them saying, all right, which one of these has some relative outperformance? So the tide is unimpressive. It's just, it's up. It's up in a sloppy sideways market. ASML looks much more interesting as a potential relative outperformer. I would not trust or touch AMD, having gone straight into the stratosphere. But no, not yet for me. I want to see better clarity in terms of double green before I commit to buying, and buying SMH today would be buying at a brand new high. And I don't roll like that. So nothing yet, but I'm hoping soon, right? I don't want to be short. Well, no, I take that back. There could be a chance we actually pull back. I really don't want to be short, but I don't want to underestimate the fact that we do have the potential for some resistance there. So not yet, not by my process. Okay, thank you for the question. Regarding my watch list, what would trigger action, buy or sell on a watch list given an active week? 1,500 earnings reports. So William, of the 1,500, frankly, probably less than 2 dozen matter. What do I mean by matter? We live in a high concentration world now. We live in the broader markets and in a sector universe that ultimately does what? It measures things unevenly. So not all stocks are important in the same way. Not all stocks are weighted within the indices and the ETFs in the same way. So yeah, there might be 1,500, and even a disproportionately large move in a low weighted, percentage weighted stock can affect the broader average, can affect the sector. But as a general rule, very few stocks have that ability aside from earnings. There are probably less than 24 stocks that really matter when you think about heavily weighted sectors and their place within the indices. So I'm telling you, of those 1,500, probably less than 24 matter in terms of the impact on the sector or the index. Now, they clearly matter to the individual stock, right? But I'm always looking for that connective thread. What are the reverberations when a high impact stock, like we had the tech stocks last week, that was a huge week because those names have a lot of influence, not only because of the potential for a disproportionate move, but also because of their weighting within the ETF, weighting within the index. So this week, I don't think it's going to be nearly as potentially volatile as last week was, but my buys or sells are not going to be triggered because of earnings necessarily. They're always going to be keyed off volatility, sure, and earnings is a kind of volatility, but what's going to trigger my interest, not entry, interest in a market is going to be structure first, right? So once you get the structure down, then we can use volatility. I hope that makes sense. So volatility does not preempt structure. Structure always comes first. And then we deal with the volatility that's happening within the structure. So if it's an uptrend and earnings could create a pullback, Yahtzee, right? If it's a sideways market that's compressed, that's in a consolidation, and we might get a break out of that, that's going to be on volatility. So hope that makes sense. Can I take a look at XOM? Sure. So, and I better mention that while energy stocks have come back, energy has come back, energy stocks have not. So I'm bullish a number of energies, none as much as natural gas. I did a whole video on natural gas in the free video last week over at the Simpler Trading YouTube channel. So if you didn't check out the free videos, not only from me with the futures, but also the other free videos that are on the YouTube channel, check them out. I had a whole breakdown of natural gas. I am quite bullish natty gas, but I'm bullish RBOB and crude oil as well. But natural gas is not in any way tethered really to OPEC. It has the best structure of the energies. Heating oil, crude oil, RBOB are all kind of lumped together. Well, natural gas is free to go off and do things on its own. But the problem with XOM, which takes me to XLE, is that we haven't seen then, as crude has come back from that OPEC dip, we haven't seen crude come back to really its former uptrend. And that means we're still seeing the equities, oil stocks lag. And then, of course, that's going to affect XLE. That's going to affect XOM. That's going to affect CVX. So if you're going to find relative outperformance and you are not going to do it at, per se, the individual stock level, take a look at XOP, take a look at OIH, take a look at XLE, and then look at the individual stocks inside those ETFs and find where there might be a boat or two or more that is a relative outperformer that could be leading the way higher within what's happening with the oil stocks right now. But I'm not in love with oil stocks at the moment, but I think it makes sense to be paying attention now that crude's come back. So thanks for the question. SHOP. Yeah, I love SHOP. I love what it's doing. Pre-market, we're sitting at just under $1,500, $1,499 and change. I'd love to see it lower. I'd love to see it get down even as down to 1465, but anywhere between the top line of the wave and the middle line of the wave is going to be an interesting zone. Now, remember, the last time we pulled back, we even hit the middle line to almost to the bottom. So remember, this market is capable of going lower into the wave. So do I like it for a buy? Nancy, absolutely. It's double green. Yeah, I'm with you. It's double green, and that's fantastic. Yeah. All right, gang. So just like that, today's episode of Charts and Coffee is a wrap. Thanks for joining me every morning, 9 to 9:20 here at the Simpler Trading YouTube channel. And I'll see you guys tomorrow, same time, same station. Be good to each other. I'll talk with you soon. And I'll see you at tonight's webinar, 8 p.m., simplertrading.com/scale.